Hi, everyone. Welcome to episode number 10 of Live Laugh Loans. We are live.
Yay! We are live for our Thanksgiving edition.
Exactly. I'm Myra Talley.
And I'm Shelly Panzarella. We have a lot to talk about today. But first, I think we should start off with, in the spirit of Thanksgiving, what are we grateful for?
We are grateful for the amazing rates.
Yeah. I was going to say that. Don't leave me hanging.
Yeah.
Awesome. All right. Let's go into that.
Yeah, it was actually a nice surprise looking up rates today for conventional loan, 6.5%.
What?
Yeah.
So I think if with rate buy downs, we can actually go below 6%.
We could probably get to 5s.
What?
Yeah.
Happy
So
Thanksgiving.
Yeah, that's amazing news, especially
Yes.
considering, seller concessions and stuff like that. It may not necessarily be not a great time to buy.
Yeah. It may not be, or it may be.
One of those.
One or the other. Well, and speaking of the rates, so we do have the Federal Reserve is going to be speaking December 14th, right? We have another rate hike for the Fed fund rates, which is something I think we want to talk about, because I get a lot of questions asked about, well, so when they speak, are the rates going to go up again? Right? Do you get a lot of buyers that ask
all the
you that?
all the time.
Yeah, and so I always want to tell everybody, although we have seen it to be because they've been increasing the interest rates, that our rates have gone up as well. The reason they're increasing the rates is because of inflation, which really is why our rates have gone up, right? And so the expected, they're anticipating to raise the rates by 50 basis points to 75 basis points. And what we saw last time when they raised rates, like November 4th, I think it was, November 10th, we saw rates actually go down. Right. So we're hopeful that we could actually see that same thing happen again. And I think a lot of that is the certainty around the market.
When the market does what it's expected to do, or when it does better, that's when we see an improvement on rates.
Yeah.
So just because the Fed is raising their Fed fund rate doesn't necessarily correlate that mortgage rates will also rise.
I agree. Yeah. And I think that's been the thing that's been a big question for a lot of people is, well, if they raise the rates or they hear that, because that's headline news. Federal Reserve meeting is X date. Those are all posted out throughout the year. And then, of course, you hear the headlines again of the fact that they're going to raise those interest rates, which we actually want them to. Right. We want them to do what they say they're going to do. As you said, that brings that certainty back into the market, which will help us to feel more confident in that. I did want to bring this up too. So something that I had talked to one of our clients about was the Fed fund rates, but also they asked, like, what would be a good way to track rates if I'm, rather than just call you every 5 minutes to see where the interest rates are at, or every day, or whatever the case is, which you can obviously do and you should do. But something that we track and look at to see where our rates are at through the year is a 10-year treasury, right? And so we've seen that over the course of the year. Over the course of the years, we've followed that based off of the 10-year treasury. And I think that's one thing to think about, because everybody's asking, like, what do you think rates are going to do next year? Do you have a prediction on that?
Well, I mean, I just go off watching Barry Habib every morning. And his prediction is just, first quarter of the year that rates should go down. Again, like we've said before in the show, they're not necessarily going to go down to what we were in the past, but, in the 5s, probably is what he's thinking. And I kind of agree with that.
Yeah. And I mean, I think, so there's a couple of thoughts around this. Number one is, if the Fed fund raises rates again, that again brings certainty, right? Which the biggest issue right now is a lot of the banks and the economy, they're uncertain of what they're going to do and how that's really going to affect businesses and economics and all that other stuff. If there is certainty, much like we saw last increase, you'll see the rates either stabilize or, like you said, go down.
Right.
If we head into like a global recession, that also puts us into a lower interest rate. Like, I mean, we saw a recession, I think it was, when was our last recession? A little bit in 2020, right? And rates obviously have come down since then. But there were 3 things, and I'm looking through my notes here to go through that example because I've got so many in here. Inflation, if inflation continues to go up higher, rates will continue to climb. At some point, there should be a curve on inflation, which we're already seeing. If CPI responds well, which we're seeing today, this is option 2, We'll see a gradual decline in deceleration, which will also then stabilize rates. And then we talk about the global recession. If, in fact, we go into a global recession, what's going to happen is people are going to be looking to go into a more stable fund, which is our 10-year treasury, which is what we actually follow, right? So when we circle back to the 10-year treasury, if people are buying into that, that means that the prices are going to go up and our bonds will go, our yield will go down, which would mean that our rates would go down.
Right.
And not that we want to go into a global recession, but that would be an opportunity for us to actually see rates go down in 2023.
Yeah.
So I would say I feel pretty good about the fact that we will go down. Now, whether we go down, I don't know about 5% early in the year, but maybe.
I mean, but if technically speaking, so like rates were at 6.5% today.
Mm-hmm.
How much different is it going to be, you know, from here to 3 months out? Are we
Yeah,
going to see maybe 6%, you know?
Yeah. And I think even, I mean, we saw a little bit of a flurry in applications and pre-quals just over that time frame of the rates dipping a half a point.
Right.
Right? Which I think is, you know, consumer, I don't know if you call it consumer confidence or people feeling like, hey, this is an opportunity for us to buy at the dip.
Yeah.
You know?
Well, that also brings me to, you know, that other announcement that we heard this week of Nevada down payment assistance program. They released a new down payment assistance, not just for first-time home buyers, for anybody.
Yeah.
So the program allocates $7,500,000. So they say it's going to help approximately 500 families, and it's going to give them $15,000 towards their down payment.
Mm-hmm.
So it does have to be towards down payment. That's the one like caveat of it. It cannot be used towards closing cost how the current one does.
Mm-hmm.
But that's quite a bit of money. You know, they're doing stuff to the economy to help these first-time home buyers or anybody get into the home.
Yeah.
So now if you compare that with the seller concession and maybe the seller can cover half of the closing costs or all of the closing costs, you know, it's a really great benefit for somebody on the sideline right now.
Yeah, no, I agree. And, you know, the income limits on there are a little bit high. I mean, depending on your family size, you have to look at income limits. Pretty similar to the traditional Home is Possible program as far as credit score requirements and employment. But I thought what was interesting is you have to be a Nevada resident.
Yeah.
Which you didn't.
I feel like that's kind of a good part of it, I guess.
Yeah.
Because with the other program, anybody moving from anywhere could take advantage of the program.
Correct.
And now you have to have a 6-month residency of at least one of the household occupants.
Correct.
So
yeah. Yeah. So, but to your point, a lot of people had moved in from California taking advantage because they're going to occupy the property. They could have taken advantage of the traditional Home is Possible programs.
Yeah.
This also is offered for conventional financing where the first-time home buyers just FHA, VA, and USDA, right?
Correct, yeah.
Yeah, so I think it's interesting. And that just launched this week, right?
Yeah.
And we were talking about the difference with the forgivable or not, whatever you want to call that. Do you want to talk about that?
Yeah, so typically with the down payment assistance programs, they have a forgivable 3-year period. So you have to live in the home for 3 years from the date of closing in order for that grant money to be fully forgiven. So with this new program, they basically give you 3 years from December 31st, 2025.
Yeah. So I think that.
Wait a second. What year
that
are we
would
in?
be, yes. That would be, yes, that would be right. Yeah.
So, but that's when the program ends. So anybody purchasing today is going to have that 3-year that 3-year forgivable period. But if somebody uses this program 6 months from now, and if the funds are still available, they're only going to have a 2.5-year waiting period before they can actually sell their home.
Which, I mean, that would just give you less time that you'd have to wait, right? Yeah. But there is limited funds, right? So you said 500 families.
Yes.
So, I mean, this just launched the 21st. And remember, what was that other program that we had that was also limited funds? And we thought we had, was it Hope for Hope brings you home? That was specific to zip code. So this is not specific to.
Right. It's the entire state of Nevada.
And limited funds. I don't even think it was that much in funds. So it's going to help 500 families. I would say if you're interested in this program, definitely reach out to Myra and myself. We want to help you, connect you, and make sure that you qualify and then connect you with an agent who can get you into a home, so that you can take advantage of these. It really is based off of a reservation. So in order for you to do it, you have to get in a contract on a property, and we have to reserve the funds.
Right. So we can't reserve the funds until we actually have that accepted offer.
Right. And then the whole loan approval and all that other stuff would be normal.
And the rates are preset by the program. So
Correct.
They aren't set by the lender. It's just whatever the program is offering that specific day, and they can change on a day-to-day basis.
And you actually had the rates, wasn't it like 7.25% for today?
Yes, it was.
Versus what was our first-time home buyer?
Let's see. So this was first-time home buyer. If you get 2% in down payment assistance, that's 6.375. And if you opt for 4% in down payment assistance, it's 7%. So it is a little bit lower for the first-time home buyer.
Yeah. But the first-time home buyer, so the limit in sales price, so here in Clark County, of course, it's $349,000 if I'm not mistaken. Same FICO score requirement, but you get 2 to 4%, and that can be used towards both.
Correct. Down payment and or closing costs.
Right. Where the other one is solely for the down payment.
Yeah.
Right.
Yeah. They both have a 45% debt to income ratio, so we can't push to 50% like some of the other programs allowed us to. But they're both still good. But sometimes, we'll be able to go side by side and say, hey, in your specific case, one or the other may be a better option.
Yeah. And I think that's the biggest thing is, reach out to us, because working with us I actually talked to an agent the other day, and they're like, I have some lenders who just absolutely don't do down payment assistance anymore. Yeah. So work with a lender who does. You do have to participate. You have to be approved with and we're Nevada Housing, Nevada Rural, we're culinary, we do USDA. So we have all of these different options for you.
And if we're not, we would always be like, hey, how do we find out? How do we get on it? Because I don't understand how some lenders are, unwilling to help based on some programs.
Yeah.
The more people we can help to take advantage of these programs, the better.
I agree. And that's something too. Kind of switching gears from down payment assistance, as we're heading into the new year, we've got a lot of our self-employed borrowers. We just talked about another investor program that helps with Deep Haven Mortgage, which helps with our self-employed borrowers to do their tax returns, not to do their tax returns, but to finance people without having to utilize their tax return income, which we know for business owners is difficult in some cases, right? Because they want to maximize their earnings, but minimize their tax liability. Is that the right way to say that?
Yes.
And so this is usually the time of year that I'm reaching out to my self-employed borrowers who are trying to prepare to purchase. But we also have these different programs that are out there today, speaking of that one that we just heard about, that will allow you to buy a home without having to worry about how your taxes are done. You can use bank statements. You can use profit and loss statements. You can use, what would be that? No ratio is another type of program, and even the debt service coverage act. So kind of switching gears as far as that, totally different from our down payment assistance program, but definitely, when you're saying, hey, we go out there to help you find different programs, we do have, we are very open to doing that, to find what's best for our consumers, our clients and such. All right. So I want to switch gears to, which I thought was interesting. So Redfin posted an article that said home buyers are looking to move to Sacramento, Miami, and other relatively affordable places. Where do you think Las Vegas stands in that?
I'm going to take a guess and say number 3.
Could that be because I already said the article? Myra's always super honest, and she's not cheating. Why, Myra, you're right. It is number 3, which I thought was crazy because, here being local, you always hear these things like, unaffordable, so hard to buy a house. But if you think about it, for people who are coming in from California, they were talking about New York. This is an affordable place to live because of no state tax. Right. I've heard the one thing that's different for New York to Las Vegas is our car registration.
I was about to guess that same thing.
Yes. Like when my husband moved here, he's like, our car registration is so expensive. I'm like, what'd you pay for out there? He's like, $50 versus $450 here. And I'm like, it's because your roads are horrible. And that's why they don't care about your helping your guys' streets or whatever the case
We have
is.
to pay for all the cones on our roads here.
That's true. Exactly. Which there are. That's our state bird, right?
Yeah.
Is our flower. State flowers are. So I thought that was pretty interesting. Now, something to think, and we do not have a lot of people who are moving out. So the top 10 metros where home buyers are moving into, number 1 being Sacramento, number 2 being Miami, number 3 being Las Vegas, number 4 being San Diego, and then number 5 being Florida. Those metros that are moving out are number 1 being San Francisco, number 2 being Los Angeles, number 3 being New York, and number 4 being Washington, and number 5 being Boston. So, I mean, just the top 3 alone, right? A lot of them are coming from states that have income tax. Right. So I could see why they would be flooding to Florida, and then, of course, to Las Vegas. And even for Sacramento being number 1, I've heard it's because San Francisco, the Bay Area, is so expensive to live in.
Right. Well, I've even had a client, they were going to sell their home that they had in San Francisco and buy 3 properties here.
What?
Yeah, just because that's how much their home was valued over there versus, how little they can get it for here.
Yeah,
still.
yeah. And that kind of leads me to the conversation around like the inventory today, because there was something that they talked about where investors have slowed down in purchasing. I think it was like Q3, 30%. Investors plunged 30% in the quarter 3. Home purchases by investors plunged 30% in quarter 3, which I think actually leads to a even greater opportunity for our owner occupieds, because that was the biggest thing, right? Yeah. They were having a hard time competing.
Yeah. Well, I do think that this market that we're in is I would say it's a lot for first-time home buyers.
Yeah.
And don't get me wrong, because I understand like the interest rates are a little bit higher and payments would be a little bit larger. However, with all these programs that are being offered and all this help, it's mainly trying to get these first-time home buyers in, and people who are settled into their home are probably people who purchased, last year, the year before, and they're not necessarily ready to make that
another move
up yet.
Yeah. I mean, I would say those who are in a 2.5 to 4% interest rate today would be difficult to make a decision to move because they've just recently moved into that home. But yeah, I do think, if you get past the noise around the rates, you definitely can see the opportunity that's around us for home buying. I mean, I had somebody say that actually at one of the open houses we went to, it was like $1 million sales price. And one of the client or agents had said, my client's only willing to go up to 900. He's like, make us an offer. I mean, this is an environment today where you can see negotiations to that number, $100,000 off of a sales price, which, that wasn't heard of beginning of the year or even in 2021. Right. So great opportunity. We do have a guest that's popped on here that says, that's saying hello. Hi, Sophia.
Oh, hi, Soph.
Nice to see you. And speaking of family, so we'll wind things down or around, I guess. What plans do you have for Thanksgiving?
We just get together as a family. So we do a lot. When I say we, it's not really me, but we do a lot of cooking. And we just get together and spend the whole day with the family, all my nieces and siblings, and it's just nice.
Yeah. What time do you guys typically start dinner, or your family
probably
time?
Probably around 5.
Okay. So what do you do before that?
Work out.
Okay, all day? I remember we used to do like 1,000-calorie burnout just to get ready for the turkey.
Every single Thanksgiving. Never I feel if I don't get my morning workout in, I'm not entitled to
enjoy this. But you're not having turkey this year.
True. This is the first year we decided to not cook turkey, and we opt for tamales.
Wow.
Normally my mom makes those for Christmas, so it's like a tradition that we always do it. But this year, I guess they just...
So she doing turkey for Christmas?
I'm not sure. I'm not sure.
This is the first year we have neither of our stoves are working. So our stove at our current home is broken. Apparently we've not used it enough that the buttons don't work. Oh, no. It beeps this whole time. And then, of course, our home in Boulder City is not quite ready for us to cook. So we are going out to dinner to enjoy a Thanksgiving dinner. So I'll let you guys all know what that looks like. What about Black Friday, or what do you do the day after? Do you do anything special on recover?
Yeah.
Oh, so you guys eat.
Recover from turkey hangover.
Oh, I was going to say, or from the 1,000-calorie burnout. Both that you work out.
You can't move.
Yeah, right. So I think this year that's like back and forth. I used to love to do it when Sydney was like a kid. Like we'd go and get all the super crazy deals for super crazy toys that she just doesn't use anymore. Yeah. But now that they're older, what do they like? The gifts are much easier to get, and they're not much discounted. Yeah. Not really much easier. Much more expensive, and definitely not on the doorbuster line at Target or at Best Buy or whatever the case is. So, but she did say she wanted to go Black Friday shopping. So how many of you out there are going Black Friday shopping? Make sure you comment or let us know. Where you're going.
I think I went once and I regretted it.
Did you? Mm-hmm. So I took my nieces and nephews one time, and I think they will never go back again because it's crazy, right? But I use them as like placeholders, like go stand in line. We're going to do this shopping. And then when I come out, you'll go, like it's strategic.
Yeah, no, I think I was like a teenager, and I had heard all these crazy stories of, Walmart has these amazing Black Friday deals. Went to Walmart. Oh my gosh, worst decision of my life.
Oh yeah.
Bumper to bumper, like with carts, people like hitting your ankles. It was just so bad.
Yeah.
And I've never ever gone Black Friday shopping again. I didn't even think the prices. I would have rather paid the $10 extra.
Yeah.
To not have to deal with that.
True. I think so now that I have a little bit more clarity around like dollar per hour. I definitely believe in that. But I think there's some people who are like out for that, like the endorphins or the rush or whatever it is, to actually like say that they got $10, because my husband would be one of them. He'd be like, oh yeah, and I beat up this girl and this, I had to go I got my card and whatever it would be. I love him, but he's very like from a competitive spirit nature, running for the only TV that's out there for $6.99 that you could pick up next week on Cyber Monday for $6.79.
Yeah, that's my point that I was going to bring up. Now Black Friday literally starts in November, or sometimes in July. Oh, early Black Friday. It's halfway to the end of the year, so now it's literally, as long as if you have an item specifically that you want, it's almost like you have to stock that item for a little bit, and then you'll see that it goes on sale, and you don't have to wake up at 3 a.m.
Yeah, exactly. Yeah. Well, and that's the thing too. I think they've stopped the Thanksgiving Day sales, right? Or is that still going on? I haven't seen
they still have them. I think a lot of stores are just now closed on Thanksgiving. So before Black Friday would start, obviously on Friday, but then it got so competitive that they started opening Thanksgiving Day, and then it started at 8 p.m. and then it got like 6 p.m. and then it's like 3 p.m. and it's like, wait a second, people still have families they need to spend time with. So I think they've kind of wait a second, and they started going back to Black Friday,
to actual Black Friday. Yeah. And I think when you were saying like a lot of them have already posted their Black Friday sales already. So I'm hoping the hype isn't as big, because I will be out there this year trucking down those carts and I guess ankle biting on those people. But
so what are you going to go shopping for?
I have no idea. Who do you shop for? I will say this, because most of the stuff I buy either last minute or it takes a minute to kind of figure out what you're going to buy for other people.
Yeah.
Like, do your kids tell you, like, here's what I want for Christmas, and then you have a list, or do you actually think of the things?
Those kids.
Like Sophia, by chance, does she?
They, I'm not even sure what they want for Christmas. I'm pretty sure they already have everything.
A list?
They don't have a list. I mean, Taylor Swift tickets.
Oh, you were one of the lucky. Yes. I mean, seriously, because I was on, so you got them. And I think I got, because you're American Express, I got them on a different, I think it was like Discover or something like that. So that's the next day.
No, we actually just got pre-sale from signing up for, like,
because they're the fan club?
I guess.
Really?
Yeah. Mm-hmm.
Oh, okay. So they're like legit Taylor Swift fans.
Yeah.
Okay.
So we got lucky. We got good tickets for that. And I was trying to convince my nieces. I was like, if we sell these, we can make a lot of money.
Seriously?
They didn't go for it.
No?
Nope. I was like, come on. I was like, we can make money, and we can buy one of you guys a car. And they're like, No.
Really?
Yeah, so they're true Taylor Swift fans.
Aw, but they're going for the experience. Are you
Yeah.
going with them?
No.
What? Who's going with them?
So it'll be four of my nieces, and
Aw.
then Christina will go. So it'll be 5 of them.
Wow. What is
Yeah.
so they're going for the experience versus
So, I mean,
monetary benefit.
My oldest niece, 21, and then
You're like,
Christina.
they're not just all going by themselves,
Yeah.
like little kids. No,
Yeah.
that's awesome. Well, congratulations to the Talley family for their early Christmas gifts going to the Taylor Swift concert. That's really all that I have for this week. What do you got? Anything else we want to add to that, or we want to wrap it up?
No, I think we're good. Just
We covered everything.
yeah, thankful for another year.
Yeah, crazy year. Thankful for you. Glad we're on episode 10.
10.
Amazing that we we decided mid-year to do this, and we've been able to put together some good content and bring this out to you guys. Of course, if you I do also want to say happy birthday to my dad. Today is his birthday, his 75th birthday.
Happy
Journey around the moon or
birthday.
sun or whatever you call it. Yes, happy birthday, Dad. Love you very much. He's my rock and hero in my life. Which I know he's not watching because he has no idea how to get on Facebook,
Happy
YouTube.
birthday 3 days ago to Soph.
Yeah, and Sophia, yes.
Happy 10th birthday.
Happy 10th birthday to Sophia. But with that, want to thank you guys all for tuning in, episode 10. We will do live versions, but stay tuned for our next one, episode 11. We want to wish you all a happy Thanksgiving. If you are going Black Friday shopping, please stay safe and look out for Shelly Panzarella and the family. But truly, enjoy your day. Thank you so much for joining us live. Anything else you want to say?
Nope.
All right. Well, that's a wrap. Take
Bye.
care. Bye.